using appreciating assets to create liquidity through bond securitization. There comes a point in time where all owners of non-income producing appreciating assets consider a liquidity event for that asset. There currently exists only two methods to achieve this liquidity event: monetization and sale. Neither approach meets the needs of the owner of the asset. Monetization typically will result in a low loan-to-value amount of liquidity made available, and when coupled with regular interest payments, can dramatically reduce the liquidity initially provided. With regard to selling the asset to create liquidity, most owners do not want to give up a long-term appreciating asset for a lump sum payment that does not reflect the true value of the asset. BCM Capital Management is pleased to introduce a third method of creating liquidity using non-income producing appreciating assets that truly meets all of the needs of the owner. By partnering with a large investment bank and using its BCM Uplift TMIS investment methodology, BCM is able to create liquidity for owners of appreciating assets without the need for loans or selling the asset. Assets acceptable for this program include, but are not limited to, land, precious metals, precious gems, in-ground assets, including but not limited to oil, gas, and minerals, fine art, and collectibles. The benefits to the owner of the appreciating asset are substantial. 1. Lump sum payment. The owner of the asset receives a lump sum payment from the bond proceeds after the sale of the bond. 2. Regular payments. The owner of the asset receives an annual payment throughout the term of the bond. 3. Tax advantages, because the annual payments to the owner of the asset are produced solely through the BCM Uplift TMIS investment methodology. These payments are tax advantaged. The process of creating liquidity for appreciating assets through bond securitization is as follows. 1. Owner of the appreciating asset engages with BCM for its services in this process. 2. Working with BCM and the owner of the asset, the investment bank creates an SPV and begins due diligence on both the asset and the owner of the asset. 3. Once due diligence has been completed, the appreciating asset is pledged to the SPV as collateral for the bond issuance. The owner of the appreciating asset maintains ownership of the asset. 4. The investment bank issues and is responsible for the entire sale of the bond. All fees generated by the investment banker and the vendors they employ are all paid out of the bond proceeds. There is usually no upfront fee either paid by or requested from the owner of the appreciating assets in this process. 5. Once the bond is sold, the bond proceeds are held in a custodian bank chosen by the investment bank, and BCM begins its fund trustee function. The custodian bank receives confirmations of every transaction performed by BCM, and the entire process is fully transparent at all times throughout the bond term. 6. At the end of the bond term, typically 10 years, the bond principal is repaid to the bond purchasers and the process concludes. The pledge of the appreciating asset to the SPV is released. 7. The owner of the appreciating asset can repeat this process as many times as they wish. This process, unlike monetization, produces revenue that are not loans and no interest payments are required. Furthermore, unlike a sale, the owner gets the liquidity and still maintains ownership of the asset. Finally, and most importantly, these monies can be used for whatever purpose the owner chooses. It is clear that the methodology outlined above is far superior to anything else offered in today's financial marketplace. Schedule a call by selecting the QR code or email us at info@bcmcapitalmanagement.com for more information and see how you can create a liquidity event and generate substantial revenue from your appreciating asset.